Okay. So, don't get mesmerized by megatrends, okay? Those of us who do like public television, or National Geographic, or popular science, we do get mesmerized by megatrends, but fight the urge. Fight the urge. Okay. China. Ooh, that's a good one. Healthcare. Woo. And the baby boomers, okay? How about combining all these? And this is a picture of Chinese seniors in a new medical facility. How about that? There's a super investment, okay? So lo and behold, I had 3 students from China who did a report on a high-end retirement community for the wealthy and growing Chinese numbers. Yeah, so they had it all. So yes, but you have to recognize that your company isn't the only one going after that market. Remember history, okay? Things like the gold rush. Everybody and their brother rushed up to the Klondike to get gold, okay? There are only a few initial players that make a lot of money, okay? So don't lose your head over a megatrend, okay? Be aware of things like, okay, you might get a piece of the action, but it's going to be highly competitive, it's attracting a lot of competition, you don't necessarily know the market. Many of these, in the healthcare industry, you've got significant regulations, okay, that will compress your profits. In resource stocks, as soon as the price of a mineral goes up, it signals that brings new capital onto the market, and then basically people start planning expansions of their mines. Okay? So in a few years' time, the prices will be driven down. Okay? So there's a lot of different ores out there. There's a lot of different oil, natural gas out there that can be brought in. I mean, natural gas is an excellent example, right? With the new techniques they've got out for shale gas that we now see, the price of gas is low despite the record consumption of natural gas. Okay? And that can happen. It could happen in a number of the other resource stocks as well. So you're working at investment banks, you're pushing the stocks, you're giving the people, your clients, the best picture, okay? But years down the road, you got to recognize that the mineral prices may drop because there's just no supply on the market. Supply will catch up to demand. Okay, finally, gremlin number 10. This is the one that really gets me, because I met a lot of characters out there who are managers of companies. So, yeah. This company, Gemtech, okay? I can't remember what the acronym stands for, but hopefully none of you are familiar with their product. Some of us may have relatives that have served some time, but nowadays, you don't have to have your relatives serving time in jail. They can be out in the community, okay? Maybe at home, okay? Actually, it cuts down the cost quite a bit, right? That's a great idea, actually. It saves the government lots of money, okay? So you have students staying at home because of technology. They don't have to go to class, right? They can look at the web, see their professor, or just look at the notes. You got prisoners staying at home. Watch out you don't mix, okay? Maybe a growing trend would be student prisoners at home. Okay. The analyst's assumption here. They took a look at this stock, and they had $1.50 net cash, net of any debt. It wasn't too hard to analyze. The balance sheet is extremely clean. What's the problem? Why isn't it worth $1.50 or at least $1? Why is it trading at 70 cents? Anybody know why? Nobody has a guess why a publicly traded company would sell at 70 cents, yet have on its balance sheet $1.50? Would you like to buy some shares? I could offer you for $1. Well, just sign up after class and I'll distribute something. Okay? Yeah. Well, this is where you really have to read over the proxy circular. It will explain items like who owns the company. Well, there are 2 major shareholders of this company. There is one fellow who is both the president and a 16% holder of the stock. And then there is another shareholder who is an individual that is associated with a brokerage firm. Okay, I believe he is an institutional broker. And that's all we know about him. Okay. So, and then you have some ownership by some of the board members. Well, the shareholder / manager can make money in several ways. He can wait for a dividend. Surprisingly, the company doesn't pay any dividends. He could get his salary and bonus. Yes, he does get a salary and bonus. He also gets consulting fees. Yeah, so he's getting those amounts of money despite the fact that the cash is sitting there, and his claim is that they're looking for a way to deploy the cash. Well, they've been looking for 2.5 years. Claimed it was an optimal time to find an investment after the market crashed and the economy was weak back in 2009. Could not identify anything. Yeah, so he doesn't have the same incentive, right? In fact, as the company is bleeding about 8 cents of cash every year, he's taking his same amount of his salary, the same bonus, right? Bonus for what? The company's losing money. Well, I called him up and said, what's with the bonus? He said, well, that's for the past. Yeah, when they made some money in the previous years. And also, he's working hard looking, right? He and the board members also issued themselves some options at 67 cents a share. Called him up on that. His answer was, well, you can buy shares too. Yeah, but you don't obligate to buy the shares. I didn't want to get into deeply with him. He was getting aggressive, okay? So, yeah, I got snookered, okay? I got snookered by this company, okay? And I'm here to tell you about that. Oh, yeah. Okay, so I subsequently learned, what about this other shareholder? Well, there is some stories on the Bay Street that some of these people do a little bit of hanky-panky and sort of reward their friend. So this friend that you think would be a guardian of outside shareholders' interests, who just holding 17%, not making any salary or bonus, he's looking after his friend, right? So he's not pressing him to pay out cash dividends or to sell the company. No, he's just happy, okay? Yeah, so be very aware of, what do I like to see in shareholders? Well, I like to see more of an institutional shareholder. Something like let's say, a private equity fund that might have an interest, like Clairvest, for example. It's run by the Rotmans. They take interest in some of these public companies. Maybe some of the well-managed, hedge funds. I like to see them. Not Paulson. He's got kind of a black guy now, but companies like that, good institutional shareholders. And there's some evidence that those institutional shareholders make companies more honest. Yeah. But yeah, really understand their incentives, and I didn't put it on, but the other parties you want to understand the incentives of, those are the investment bankers, because their incentive is to generate fees through underwriting, okay? So they will present, in fact they call them sales pitch documents, okay? They go out and try to get treasurers interested in using their services to sell stock. So the analysts that work with them, although many of them have CAFAs, they are not going to tell lies, but they're not necessarily, they're going to present companies in a favorable light. Because, let's face it, the truth has many shades, okay? So they may shade it a little more on the optimistic side than on the pessimistic side, okay? So that tends to happen. Unfortunately, we don't have sources of good buy-side analysts. In fact, we've learned that from observing what some people do as buy-side analysts is they often use sell-side analysts. So, do your own homework, okay? If you're investing money for yourself or your friends or other people, right? So those are the 10 gremlins, 10 plus 1 gremlins that I came here to talk about. And do you have any questions about those gremlins or anything that... Yeah, it's been very therapeutic for me to get some of these things out of my chest. Yes?
I'm just kind of wondering, what's your view on like the tech megatrend right now? Like, everyone's sort of pushing towards like app development and all that type of stuff. What's your view on like, you know, what you should be like about when you're trying to model these big, upcoming tech companies?
Well, my track record is not good when it comes to, and I realize why. It's because you're often flying blind, right? You have no clue about what's coming at you, right? You don't. App development. Well, everybody and their brother is in app development, right? I have a former student who got money from some venture capitalists, and they have to apps done for the Apple and some of the other cell phones, smartphones. So whenever you see everybody talking about it, it's probably not. How do you get an edge? Right? Ask yourself, what do you know that the rest of the analysts don't?
So basically, if a company has like cash sitting around, we should be careful of what they might be doing.
Yeah, don't just assume that that cash, when you do your DCF modeling, don't consider it as totally redundant cash, right? Don't get your DCF value of your operating flow, and then add your cash. You do that, to come up with a price, but then take another look, right? Take a look at how that company is being governed, right? Who are the key shareholders? What are they paying the managers?
I know a company that has tons of cash sitting around and they're doing really well.
And are they paying it out?
They're not paying out either.
Yeah.
Apple has 75 billion cash sitting.
Yeah. So, interesting. So you might not. A danger would be for larger companies that they take that cash and put it into some sort of acquisition that generates a negative NPV. Right? Good question. Anybody else? Nobody else?
Given that most of the large cap companies have so many analysts, do you think that students should focus their efforts towards small and mid cap to maybe?
Oh, definitely. That's what our Laureate student doesn't fund. Yeah, that's what some of you are on. Yeah, definitely. If you want to have a relative advantage, it's a race. Right? You're racing to get information. You're racing to figure it out before others. It's one of the most competitive activities you can find. The larger analysts won't bother with the small ones because they can't take the positions in them. If they start to take positions, they'll move the price up, and then any sort of profit they expect will evaporate. Yeah. But on the other hand, when you get to the really small ones like Gemtech, then you get into the seedy world of small-time hoods that are operating as CEOs and presidents. The guy irritated me so much I can call him that. Okay. Yeah. Okay. No one else? Okay, we might as well have a...
Thanks, guys.
Yep.